Hey, welcome back to the channel, guys. It's Will here again with another one. Hope you guys are doing very, very well. So today I wanted to make a quick video here tutorial to show you guys how I write options, exactly how I break down each and every position that I choose to write, what I use to actually scan through which positions I do want to open. And this is a strategy, guys, if you don't really want to be trading for 8 hours a day or looking at charts all day or setting take profits and stop losses, screwing around on the 5, 10, 1 minute charts even, right? If you really want a more passive strategy that generates you consistent realized income every single week like I do, this may be the strategy for you. It's one of the easiest strategies out there to master. You really don't have to overthink this, guys. It's very, very, very easy. Anybody can actually do it. And when I used to work at the bank, some of my highest performing active trader clients, keep in mind, I used to only actively manage accounts that were worth $1 million all the way up to $50 million. My best active traders used to all run this strategy. Since they were all high net worth individuals, they don't have that much time to be on the charts every single day since they're running businesses and doing various other things, right? So this is a very, very passive strategy that allows you to generate good profits with low amounts of risk, provided that you respect the strategy. And it's a very, very simple one, guys. So let's get into it. More specifically, it is called the options wheel. So we are writing puts, meaning we want to buy stock if ever we get assigned the position from writing puts. And then if we do end up owning the shares, doesn't matter. We're going to write calls against that position until the position comes back to our direction and gets called away on the other side. So the strategy goes something like this. Here are the rules that you guys should write down. Pause the screen if I ever go too fast, guys, right? But these are very, very simple rules. You may see 7 rules on the screen right now and get scared. They're very, very basic, guys. Number 1, you must want to own the stock. Please do not write put options on companies that you know little to nothing about. Some very, very strange biopharma companies or very, very small market cap companies, stuff like that, guys. You want to avoid those. If you're not comfortable with the stocks that you're doing these options on, the strategy will stress you out. Even if you're not running this strategy and you're doing something on stocks you don't know about, it will stress you out, guys. We're trying to remove the most amount of stress from the markets possible so that you guys can literally only spend 5 to 15 minutes on this per day. This is what I do all the time to travel and do my other business ventures at the same time. It's the easiest strategy ever, but you must want to own the stock, okay? Very, very, very important. That's why it's rule number 1. It sounds easy, but you can get sometimes greedy when you see some premium on some of the lesser known stocks. Wall Street kind of tries to bait you in to doing those positions. Do not fall for it. Only write options on stocks that you want to own. Number 2, you want to be writing these on red days. So if a stock, let's say if it's Monday morning, right? And shortly after the open, the stock is down 3 to 4%. The reason you want to only write positions on a red day is because the probability that the stock continues lower and lower and lower every single day that week thereafter becomes lower and lower, right? Stocks have what you call a weekly expected move. So it's an amount that a stock is deemed to be able to move by Wall Street on a weekly basis, okay? So when you're writing these stocks, when you're writing these options on stocks that are already down a couple percent on a Monday or Tuesday morning, it betters your chances that by Friday, they cannot continue to decline that much. This is probabilities, right? So obviously it can continue, but you want to stack the odds on your side. So it stands to argue that they have a less of a chance of continuing to drop further and further all throughout the rest of the week, right? If a stock has dropped 3% on a Monday and you're writing options 5, 6, 7% below that, that means in a 1 week span, if it does get down to there, the stock is down 10%. Juicy discount, especially if you couple it with our next point number 3. You want to be writing these options on stocks that are close to daily or weekly support. This is very, very easy technical analysis, guys. Even if you don't know a lot about technical analysis, you should probably know about support and resistance levels. We're using daily and weekly resistance levels because they are more solid. They tend to hold up, especially if we're writing weekly options. There's a good chance that the stock either stops at a support level, okay, or bounces thereafter from it if ever it does get down to there. So this is once again putting all of the odds on our side to not get assigned the stock. But let's not forget, if you do get assigned, it's okay. You arguably don't mind being assigned the stock because number one, you want to own the stock. Number two, don't forget, we can then write calls on it. Very important to be writing close to daily or weekly support. You don't want to be writing on stocks that are just up, right? With no support in sight, okay? Because then on a severe pullback, you can get trapped. So you want to kind of target those weekly and daily support levels. Number four, we want to be writing between 0.5% to 1% weekly premium, meaning if the stock is trading at $100 on the options chain, you need to see 50 cents to $1. That would be 0.5% to 1% of the stock's value, okay? Obviously, options contracts are times 100. So meaning if it's a stock's trading for $100, right? 100 shares would be 10,000. If you see 0.5 to $1, so 50 cents to $1 on the options chain, that means you're receiving, when you write that option, $50 to $100. That will respect our 0.5% to 1% rule on a weekly basis. In my opinion, guys, after having tried this strategy and played with the numbers a lot, this represents the best risk to reward, okay? If you are consistently writing this 0.5% to 1% a week, your annualized return without compounding should be between 25 and roughly 50% a year, right? Let's take 1%, for example. If you're always writing 1% premium per week, there's 52 weeks in a year. If you're always making 1% of the account every week, your account should grow by a minimum of 50% a year, okay? Obviously, those are in ideal market conditions, but as you'll see, guys, we do outperform the index quite heavily on a frequent basis, right? This is my performance for the entire year. Keep in mind that I do use this account to live off of. You will see drop-offs, which are pretty much withdrawals from the account, right? Sometimes I do get assigned positions, the stocks do drop, but we're always able to recover since we're respecting the strategy. As you can see, guys, we're beating the S&P 500 index, right? On roughly about a 3-to-1, 3.5-to-1 basis, are we outpacing SPY for the year? And this is a very good year, right? Just so you guys can see, we're going to refresh it here so there's no funny business, right? We are even outperforming the NASDAQ, right? I'm up 53%, over 53% on the year. The NASDAQ is trailing at about 32%. We are outperforming every single other index in the books. We're outperforming the Dow Jones by a heavy margin. These are all your value stocks, right? We're outperforming the Russell, which are your small cap growth stocks. So we are doing very, very, very well. In the last week alone, Interactive Brokers, unfortunately, only refreshes the data come Monday. So I can't show you on the realized basis on Interactive Brokers. But if you want to see all of my last week's videos, I was showing at the end of every video, I show the positions that I either opened or closed and the realized profits that go with it. This is a summary. Pause your screen. I won't spend too much time over it, but these are the positions. And last week was a very light week. I didn't go very, very heavy at all, but I'm always able to generate between $1,000 to $2,500 per week, every single week of the year using this strategy. It's a very, very easy strategy, guys. And I barely spend more than half an hour per day on this strategy. And I'm in it. I'm trying to optimize and maximize returns, right? But somebody who's just doing it more passively than I am can generate arguably almost the same amount of returns with only 5 to 15 minutes a day, especially if you set it all up on Monday or Tuesday. You're good for the week, really good for the week, guys, okay? So that's why we write the premiums in this fashion. Fifthly, right? 3 to 5 positions a week. So very, very simple, guys. If you have a $50,000 account, you should be writing between 3 to 5 positions, equal weight each. So if you have a $50,000 account, you should be writing 5 positions worth $10,000 each, right? Try to keep it the same. We don't want to have overweight in certain stocks compared to others. Number 6, you want to diversify your sector positions. So if you really know what you're doing, if you're on an advanced level, intermediate or advanced, you may be able to heavily weight into one sector. Meaning if you have 5 positions per week, 3 or 4 of them may be in tech, and you may only have 1 or 2 value plays, right? That's perfectly fine. But for your average person, you do want to try and diversify the holdings. So maybe 1 or 2 tech positions, 1 financial position, 1 healthcare, 1 consumer discretionary, 1 large cap name, right? Like Walmart or something like that, right? I'll just diversify the holdings. That's just good portfolio allocation to begin with, right? And number 7, avoid long-term downtrends. Long-term downtrend would look something like a SoFi, right? Where something has been coming down and down and down and down for a very long period of time. There's other ones that I can also bring up, right? Avoid stocks that are on a weekly, longer-term downtrend, right? It'll save you a lot of headache when going through these positions, guys. You want to put all the probabilities in your favor, right? So don't try to catch falling knives. Just play stocks that have decent charts, decently trending charts, either flat or to the upside. Avoid long-term yearly downtrends, right? You don't want to start messing with those stocks if you don't have to. So that's really all the rules for the strategy. I don't want to spend more time on them than that, right? Because it's fairly self-explanatory. Step number 2 in the whole strategy. You will want to be using TradingView, okay? The reason I use TradingView is because it's a free software. You can build very large watch lists, and they do have a built-in stock screener. This is how the strategy is done, right? On a Monday morning, you will, after having potentially built some watch lists, so here you go, guys. I have obviously a growth and a value watch list. You can see I have over 120 stocks in both of them. All you want to do in your growth watch list on Monday morning when the market's open, the first thing you do is check SPY and QQQ. What are they doing? Are they green or red? Let's say for all intents and purposes, they're red. Perfect. Respects one of our rule. It's a red day. We want to be looking for stocks to write. After that, you'll go to your watch lists for individual stocks. Now, you should be building these on your own. You can go through the list of the 100 NASDAQ companies or the S&P 500 and choose which ones you want. If you don't want to do that, I'll run through these lists very slowly right now. So feel free to pause the video and go frame by frame and copy and paste the lists if you want to. These are lists that I have built. They're all companies that I personally know. Most of them are brand name companies, meaning they're household names. So none of these should really be a surprise to you if you spent a decent amount of time in the markets. This is the value list, okay? Most of these companies, once again, will be companies that you should know. They're very big companies. You can see some dollar stores in here, John Deere, Disney, right? A lot of some energy companies, some financial companies, McDonald's, Mondelez, right? All very solid companies. All right, so feel free to rewind and pause the video if you do want to copy those lists. There are over 100 stocks, all right? But let's say you don't have these lists at all, right? And you're just looking for the market as a whole. You say, well, maybe that's only 120 stocks. What if I want more? Perfect. Click on the stock screener down here on TradingView, bottom left corner, stock screener, and put only one filter, guys. Market cap, 5 billion to pretty much the maximum, over 2 trillion, right? So this ensures that you really filter out all the small cap companies that you don't want to be writing on in the first place. When you filter out for 5 billion and above, a lot of the companies that you'll find are well-known names. Thereafter, what you want to do, you want to filter by percentage change on the day. Keep in mind, like I said before, we're looking for stocks with red days. So if I'm going through my lists up here, every Monday morning, I'm doing this, filter by percentage change. That's all I'm doing. I'm going to growth, I'm going to value, I'm filtering by percentage change to the downside, and that is pretty much it. I want to look at the ones that are down the most. 2, 3, 4+% is perfect for me, okay? So once you've done that, if you've built your lists, perfect. But if you don't have the lists yet, feel free to use this stock screener. You'll see that there's over 900 stocks currently in this screener right now with these market cap amounts right here. So you'll see the Friday was a very green day, so there's not that many red names, right? Friday was a very green day. I'm recording this on the Saturday. So as you can see, right, which one comes up first? SoFi. So let's go through SoFi, right? what is the, sorry about these lines, guys. So as you can see, guys, longer term downtrend. This is a growth stock, right? If you don't know that much about it, they're not a profitable company at all either, right? So long-term downtrend, I don't like it. It's not stable enough for me. So we would go on to the next one. Let's say Nike. Does Nike respect our criteria? Well, look at this. We're on the weekly chart here. Let's blow it up, right? On the weekly chart for Nike, as you can see, we're kind of in a roughly getting close to a support zone here from this green box that I've outlined, right? Weekly support zone. Interesting. It's also on a red day, minus 3%. They just had earnings. Let's go to the daily chart. On the daily chart, you can see that there's been relative support here all throughout end of May and early June too. So we have some decent amount of price data. So when I'm looking at this, I'm thinking, wow, Nike is actually a decent opportunity. If Nike is also a household name, right? Does it respect all of our rules? Does it respect all of our rules? You must want to own the stock. It's Nike. I like Nike, right? Everybody knows about Nike. I think that Nike's a decent company. It's also a company that's currently off its all-time highs by about 38%. So decent discount on the stock right there, right? So if we go back to this right here, does it respect right on red days? Yes. SPY and QQQ. Hopefully they're also red. In our theoretical example, it is red. Are we writing strikes close to daily weekly support? Yes, we saw that it's close to weekly support. Now, let's go and check on the is in a long-term downtrend. No, Nike obviously long-term uptrend, right? Short term, it's been down for over the last year or something. But look at this trend over the long term, right? It is a company that keeps growing and growing and growing over time, right? So then what we want to do here, if we pull up Nike again, right, like we want to see, okay, the support level right here is down in the roughly, let's call it 105 area, right? It starts recently here. It starts close to 107, which is our last guy right here, all the way through about $100 is this whole support area, right? Okay, so let's go then and look up Nike stock, okay? Let's go in our broker. You're going to go in your broker and you're going to look up Nike stock here. You're going to go to the options chain for next Friday because we only want to be writing 1 or 2 week options. I always like 1 because I like weekly paychecks, guys. So let's go here on Nike and see around our support level, right? Between 107-ish down to 105, right? This whole zone right here, right, guys? Let's go see if anything's interesting for us, okay? So on the put side for July 7th, which is roughly 5 days away because we're on the weekend, right? And let's see what we have on at the 105, the lower end of the support. Well, it's only 8 cents. That's not enough. I want to see 0.5% to 1%. So on a rough basis, I want to be seeing about between 52 cents here and $1. So it's not giving it to us. Okay. It's not giving it to us at all. Now, the more advanced people will say, well, Will, that's because the implied volatility is low. I know, but just for purpose of the example, just follow me, guys. You're going to see it's all going to make sense, right? So where do we get the 0.5%? Where do we start getting the 0.5%? You can see that 52 cents only comes at the 109s, okay? 109s. Where is 109? 109 is as a matter of fact, it's right here, okay? 109. Now, it's not close enough for me. I'm greedy. I want to wait for the stock to come to me. But let's say Nike on Monday, when the market opens, let's say Nike continues with another red day and pushes it down into 107. Well, you will come back on Monday and you will potentially see now at this point, the 105 area may just indeed say 50 cents, right? Like it's saying down here for the 109s, right? So if you were to see that at the 105s, this would be a position, right? If the stock comes down here on Monday, if I see 50 cents in this area here at the 105s, I will be writing one put option for Nike. So Nike is a stock that would respect my criteria at that point, right? The stock comes down on Monday into our zone between 107 to 105-ish, right? And I see 50 something cents here at the 107s, the 105, sorry. I will have no problem writing that option because it will be respecting all of my criteria, okay? I hope that makes sense, guys. Let's go see if we can find another one, right? It's not that obvious because there's a lot of them, like let's say Micron. Micron is another one, semiconductor name, right? They sell chips. Chips have been a very hot topic recently. Micron, let's look at the chart, guys, okay? So daily, where would you guys say the daily support is? Daily support is kind of down here towards $60, right? That's our most recent support. Here, it's kind of in no man's land. There's a rough area of support here. So let's determine that this is like a range, okay? Like a rough range here between $62 and $60. I would most likely want $60. So let's go look at Micron. Is it a red day? Yes. Is it the stock in a general uptrend long term? Absolutely. Good company, right? It's just been hit relatively hard as of a lot of other technology stocks in the last year. And here is our support area. This would be a far more ideal support area, okay? But for purpose of example, right? If it was down here, this would be, if the stock was trading around down here and we were looking at these levels, guys, this would be 100% no-brainer play for me. Okay, just keep that in mind. 100% no-brainer. I would definitely be looking for this. But for now, just for purpose of example, just so you guys can know how I pick my stocks, let's say that the most recent support level here from early May is in the $60 range. As a trader myself, I would prefer for it to be over here. Okay, this is what's going to happen. You're going to go through your list and all through these red stocks, you're going to find the best looking ones. But for now, let's just focus on Micron here. $60. Okay, let's go see, guys. How much premium do we have on Micron for next Friday for the stock? So let's go to the option chain on Micron. As you'll see, July 7th, next Friday. Let's go see. 60. Only 10 cents. Not enough. Oh, sorry, guys. Not enough for me. Okay, not enough for me. There's only, my head's in the way, right? My fat head. Not enough for me. Where is the premium? This obviously implied volatility is low. It means that the stock doesn't have much volatility. Why is the volatility so low on these charts today, guys? Because SPY and QQQ were heavily green on Friday. Trust me, on a red day, these would look a lot juicier for the same levels. So 60, unfortunately, not enough premium. I would need to see 30 cents, right? 0.5%. I would need to see 0.3, which would be $30. I would need to see 0.3 to 0.6, around 60 for me to get interested. Where's that premium now? 61.5. 61.5 is your 0.5% roughly, right? Where is 61.5? 61.5 here is in the middle of our range. Middle of our range here. Right here where my crosshair is, right? 61.50. So this for me would be a maybe. It would be a maybe. I would put this on the back burner. This would be on the watch list. I would write it down on a Post-it or write it on a notepad on your computer. When I'm scanning these tomorrow night, Sunday for Monday, I'm building a list of potentials for tomorrow morning. Now, if Micron were to open Monday red and push us down to this area, you might be able to get some juicy numbers down here, either 60 or even in the higher 50s, right? In this area here. So these are all things that I'm looking at, guys, okay? In the event that on Monday morning we open red, I'm thinking, let me look at Micron. Has it opened up 59 to 60? Is there more premium here? Because I wouldn't mind owning the stock in the support area, because if we do get potentially, let's say this is a bit more advanced here, but if we do get, let's say, oversold potentially, or even on the lower time frames, if we get oversold on our local RSI, it may be due for a slight bounce. So that's how I'm looking for some of these positions, right? One of my favorite stocks to look at is Tesla. Tesla, I've drawn a green box. This is what I do on a lot of my charts. I annotate them for what I'm looking for. So I know that if Tesla next week comes down a few days and I get some good premium on the 230 to 210 levels, I'm definitely going to be willing to take it. Let's look at Tesla, for example. Tesla, right? This is just a third example that I'm leaving you guys with, okay? Tesla, for example, okay? Next Friday, right? Let's go see anywhere between my green box, which is 230 to 212. So let's say Tesla, even though it was green on Friday, let's just say it's red and the markets are red on Monday and Tesla opens, I don't know, 255-ish, right? Let's just say it happens. It opens down there. We go check the premiums here. 230. Well, unfortunately, as of now, because the stock was green, there's no premium there. Where would we have to look? It's very simple, guys. Just do half of this number, right? Half of 23 is roughly 11.5, right? So you need to see $1.15, okay? Where does the 0.5% come in? Well, half of 24 is about 12, 1.2. Need to see 1.2. So this is better than 1. This is my fat head. This is better than 1.2, right? It's now 1.4. Okay. So it doesn't necessarily have to be 50.5% on the dot. You can go slightly more, slightly less aggressive with it, right? Just one strike under. This is not paying us quite 0.5%, but almost. It's decent. 237.5. 237.5. Where's 237.5? It's right here. Okay. 237.5 would be right here. Now, it's not good enough for me. Personally, because I have so much experience with Tesla, I may be willing to do this one. But if I'm you guys and if I'm sticking to the strategy 100%, I'm looking for my optimal area here. Okay, this area is previous resistance. It should be acting as support. This is my ideal level for Tesla to be writing options on Tesla in, right? So just keep that in mind, guys. On Tesla, let's say that were to happen. Let's say Tesla opens at 255 or something like that. Let's say it comes down a little bit. Then you'd be looking in this area and you may well find the premium that you're looking for at these strikes. So you would write them, right? So that is pretty much the strategy in a nutshell, guys. Very, 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 very simple. Open the charts on a Monday morning, filter by percentage change. Look at the ones that are the most negative, right? Let's go through a couple, right? Redfin, good, yes or no? No, nowhere near our support level. It's kind of extended off a move here, so it's nowhere near our most recent support level. Next, Nike, looking decent, coming towards our support area. This I would want to look at. Micron, decent, coming towards our support area. Definitely want to look at. Etsy, what about Etsy? Let's have a look here, okay? Etsy, dangerous. Support level here, but there's no recent price history, guys. You have to go all the way back to last year to find some support down there. I'm not saying there isn't any support down there. There probably is, but it's very far away, very far away. And for that reason alone, since it's not recent, I wouldn't do this stock. It's kind of an extended downtrend here. Don't really like it. Not very favorable to me, right? Etsy would have been decent. Let's say it's in, an area like this, right? This is like kind of a more choppy area here, and you're looking and stock is right, and you're in this area right here. Then you can kind of look when you have more recent support data. It's after an uptrend. Obviously, you don't know that this whole move has happened, right? So if we go back here, let's just say, right, and you were basing it off this. Okay, this doesn't look that bad. Let's say you get a pop off of here and you're looking here, decent support down here to be writing in. And look, the support level holds relatively solid, right? 93 to about $100. It holds relatively solid for so long. Yes, it dips below. This was before earnings, so anomaly, but eventually it does pop back up, guys. So you see, that would have been a not so bad play. Coinbase, like let's say Coinbase, right? Coinbase, very, very risky, tied into crypto, but you can obviously see that there's a very big support area down here, right? So if you come close to this level and you like this company and you do believe in crypto and you don't mind taking the risk, well, if the stock starts pulling back here and you get some good premium in this range, may be worth a visit, right? So that's how I go through all of my companies. I go through tech, I go through value, right? And I'm just looking which are the best candidates for me, which are close to support and which pay decent premiums near that support. I'm only looking for 3 to 5 positions, guys. There's hundreds of stocks, right? Don't forget, you got the stock screener down here and everything, right? Now, obviously, there are other ways to do this. I personally use a tool to do this. It's a premium tool. I'm showing you guys this for free with TradingView. It's something that you can do on your phone in 5 to 10 minutes per day. It's very, very, very easy. But if you are a bit more of a professional with it, right, and you want to have access to some paid tools, there's a number of paid tools that you can possibly use, right? But I'll just give you guys a glimpse of what it potentially looks like when you're using a paid premium service, right? So this is a tool that does everything for me. Now I'll show you guys this just for intents of purpose of example, but this is what it looks like when you have paid for tools that do everything for you, right? So look at this. It'll literally tell you, okay, it'll give you all the stocks that it thinks are in good positions to be writing options. Like it'll show me Rivian, okay? Rivian as a stock, you know, you see down here around the $15, you guys can't see because of my fat head. So around $15, right? $15 strike. I like Rivian despite its extended downtrend. But let's say just taking Rivian for example for the theoretical example, right? So $15, it'll show you where the price is today. It'll give you a strike. This isn't near support, right? The support would be down here, but it gives you the strike and premium right away. And it also gives you can I move over? The annualized ROI, right? On a yearly basis. So ROI percentage on a yearly basis, right? So this is a tool that really takes that really gives you even more time, right? Gives you all the companies, right? Gives you the strike price, how much premium, what's the expected move for the stock. So there do exist premium tools that you can use that are very, very easy, plugged into TradingView and everything, that lets you do this a lot easier. That's not time consuming at all, right? So this has just been an overview of the strategy. I wanted to go through it relatively quickly, not spending too much time on any given thing. I hope this was informative for you guys. And if it was, consider giving a like, consider subscribing to the channel, guys. I do daily market recaps pretty much every day of the week. Going to be pumping out some more strategy-based and position-based content. I want to start doing some top 3, top 5 option plays of the week type of videos to go more into depth of how I really juice the premium out of these options positions, right? But I hope that this video was helpful just as a tutorial to show you guys how I choose the options to write for my puts, right? Obviously, covered calls, don't even need to spend too much time on covered calls, guys. Let's say you write the 105 puts on Nike and you end up being assigned. Let's say it closes on Friday at 104. You get assigned the shares. You get put the shares, 100 shares in your account, right? So what happens after that is you'll just look on the call side for next week, right? Let's say Monday morning opens. You're looking at Nike and you now have 100 shares. Well, all you go to do after that is you look here at the 105s on the call side right here for this very same week. And as you can see, guys, the 105 calls or let's say you get assigned at 105, right? The 105 calls are paying $5. $5 for a week. I don't know. Is that right? That's a bit high. That premium is a bit high, in my opinion. I guess it is $5. Well, yeah, I mean, we're in the money, right? So, but let's say it was around, let's take 110, for example, because it'll give you the true premium. So let's say you get assigned at 110 because the stocks around here are even like 111, right? Because it closed below. So let's say 111. So you're assigned at 111 for next week. You'll be able to write calls between 88 cents and $1. So the midpoint, let's say 92, 93 cents. Does it respect the 0.5% to 1% rule? Yes, right? What's 0.5% of 111 would be around 55 cents minimum you have to see on the bid. You can get about 92 cents. That's almost 1%, right? Maybe 0.8, 0.9% for the week. So it respects the rule as well. So you'll be able to write calls on this position for Nike. And if Nike closes above 111 on Friday, perfect. The shares just get called away. So you've made money writing puts. You got assigned the shares and then you wrote calls and then the shares got called away from you at the end of the week. So you pocketed premium writing the shares to get them. And then you pocketed premium when you were looking to get rid of the shares, getting them called away. So that's basically how the options wheel works, guys. You're just looking to write premium. If you get assigned, perfect. Give me the shares, I'll write calls on them. Then you write calls on them until the stock recovers and gets called away from you. All you're looking to do is you're looking to be the casino. Let everybody else bet on directions, right? Up, down, sideways. For you, it doesn't matter. You're just here to collect premium. So I hope you guys enjoyed the video. Once again, consider liking, consider subscribing. I love you guys. Happy trading. If you have any questions, feel free to write me down in the comments, guys. I'll see you in the next one.